Well, the Canadian energy sector is looking to rebound today following significant losses yesterday in light of the news coming out of Venezuela. Let's get more now on the impact of this on the broader markets from Zachary Hill. He's head of portfolio management at Horizon Investment. Zachary, thanks very much for joining us.
Good to be with you today, Roger.
Is this a short-term reaction and then things will kind of stabilize after today?
In terms of the
oil, yeah, that we saw yesterday into today, it seems like it's bouncing back a little bit.
Yeah, I mean, we think so. I'm no geopolitical expert, but generally speaking, geopolitical events tend to have long-lasting impacts on markets when they interact with real economic variables. And as of right now, that's not something I think that market participants are really factoring in. And so generally speaking, we do think, barring any sort of escalation or broadening of this conflict, we do think that, this is something the market's going to look past. And, over the last few days, at least in the U.S. market, it does seem like investors have been looking past, some of these growing risks.
I know. I was doing the math on the markets over the first 3 days of the year, and if this continues, the markets will be up 72 million% by the end of the year. We're off to quite a good start right now. I know it's not going to continue, but what does it start? What is it looking like to you for 2026?
Yeah, I mean, generally speaking, we're positive going into this year. I mean, one of the things that we've been thinking about is just the opportunity for market participation to broaden. In 2026, we saw a little bit of that at the end of last year, and it's starting to get talked about a little bit more broadly. But generally speaking, I think this idea where all we could do was buy the Mag 7 top of the market, and I think we're switching to a place now where some of the productivity gains and the efficiencies are going to spread out throughout the economy, and we also have tons of stimulus in the pipeline, both in the U.S. and internationally. And so we think those two things together mean that we're going to have a broader market participation, both within U.S. equities and in the global equity universe. And quite frankly, I think for diversified investors, that's going to be a very nice backdrop indeed after a few tough years.
Does it feel like with the Mag 7 and AI and that, does it feel like this is a shakedown year? We heard some comments from Wang today about not needing cold chillers. That's had an effect on the markets. Then also memory storage as well having an effect.
Yeah, I think so. I mean, and I think just as we look at intro Mag 7 moves and just some of the trends, the sub trends within the AI theme in general, what we're noticing is that things were very, very correlated with each other, over the last few years, kind of everything going up or going down together. Picking apart the price action more recently, it seems that the people have become a little more discerning in terms of how they're expressing these themes. And so we think, broadly speaking, that's a healthy thing. It means we're getting closer to the monetization phase of this revolutionary technology. And so we do expect that to continue. And it's kind of a thing for the AI trade was a beta trade for the long time. It powered the market, and now we think in 2026 it's going to be an alpha trade. And that's a fundamental difference that investors need to think about when they look at their portfolios.
And where are you looking? Where are you going? And where are you not going?
Yeah, I mean, generally where we're not going is easy. More positive on growth and expecting, global synchronized upswing. We're not looking at defensives, in defensive equities or long duration bonds. Those are things we don't like. What we do like within the U.S. is some smaller cap technology, equal weight technology, however you want to play that. Within a stock selection idea in the AI theme, and you compare that with some cyclical. Banks are our favorite in that regard. Large cap banks and the regionals, both of those have some really, really strong tailwinds. They perform quite well, but we think that's going to continue in 2026. And then internationally, we think broadly speaking, owning international stocks as opposed to U.S. index is something that's going to it benefited last year, and when we think there's a chance for the dollar to continue to depreciate, not as much as it did in 25, but to continue to appreciate and be a tailwind, to those more value-oriented sectors internationally.
And any concerns? A lot of the international markets outperformed in New York and outperformed Canada. Any concerns that they're maybe peaking or no?
We're watching, investor flows and how growth, if we do actually see this growth upswing materialize, and that's something that we're going to be tracking throughout earnings season and through this first quarter, and also the behavior of the dollar. The last few days, actually, we've seen a bit of a dollar rally. That might be some of the flight to safety around uncertainty in Venezuela. But I think those two things are right up top of our checklist of what we're going to be watching to see, if this trend continues into this year.
And of course, the Fed. What's your thoughts on where we're going with rate cuts in the U.S. this year?
Yeah, I think we're on pause right now. I mean, the Fed has already cut quite a lot. I believe it's 175 basis points from the peak and 75 basis points last year. And so, I think even if we're on pause for the next couple months, we're in that stage where, those rate cuts are going to start filtering through into the real economy. And so we think, broadly speaking, that's positive from a market perspective and an economic perspective. After Powell's term is over in May, all bets are off. We're watching the race just like everybody else. Again, that's not a place that I feel like I have any edge. But generally speaking, I don't see there's going to be a huge change in policy. And I think the amount of disagreement we have at the Fed, even now with Powell, who's a very consensus-driven, candidate, I think speaks to just this environment where the Fed's going to be less relevant in 26 than they were over the last few years. And quite frankly, I think that's a good thing for investors broadly.
Okay, we'll leave it there. Zachary, thanks very much for joining us.
Thank you.
Zachary Hill is head of portfolio management at Horizon Investments.